Welcome back to U.S. Report. This weekend joining us, Darren Fry and Jim McCormick with post-report analysis. And let's talk about corn first of all. A little increase in yield, Darren, by 0.2 bushels per acre. Ending stocks just below 2 billion bushels. Does it make a whole lot of difference, though, in the sum total of the balance sheets?
Not a lot. We're down a little bit from the last report, about 58 million bushels. Obviously, we came in a little higher than the trade guess. But the yield increase at 0.2 of a bushel was very manageable. And I think now it's going to come down to what we see happen in South America and what we see as we finish up harvest here. It's very accelerated. We're taking the crop out at record pace. And of course, that's put pressure on the market, the basis market. And we're going to see that ease here as we get past 75, 80% harvested. And we should approach that number in the next week or so in soybeans. Probably 2.5, 3 weeks in corn. So that's kind of how I see the report for now on the corn side.
So, Jim, do you agree with that? And also talk about the demand side of the equation, because do you think USDA has corn demand too high at this point?
Right now, no, I agree with it. I mean, for the most part, this number, Michelle, really wasn't that much of a changer. Your carryout just shy of 2 billion, 1.999, just below that psychological level is comfortable at this point in time. For what the USDA did on the demand, I think they raised exports a little bit. I think they're very accurate at this point in time. The real argument's going to be down the line of, what does Ukraine get? Some geopolitical, right, aspects there. But the near-term aspect, it's all going to be about this harvest. We know there's a lot of corn that's sitting in bins from last year that got dumped late in the season. Elevators are full. We're hearing elevators are not even operating during the weekend. And, that's going to be the hardest part right now is where do we put this crop in the near term?
No doubt. Jim, what about corn imports to China, though, down 2 million metric tons? That could be a little bit of a game changer, too.
I think that's something we definitely need to watch. They were at 21. The USDA was projecting them to import 21 million metric tons. They dropped at 2 million metric tons, but that's still quite a big difference from where the Chinese have it. The Chinese have it only at 13 million metric tons. Now, if you look at the world balance sheet, it is, unlike the beans, kind of tightening up a little bit. It's not essentially bone tight, but it is tightening. But if all of a sudden the Chinese number is more accurate and they're only importing 13 million metric tons instead of 21, that will be bearish to the world balance sheet and that will be price negative.
Darren, let's talk about soybeans. USDA lowered yield only 0.1 bushels per acre. Should we be happy that at least the bushels didn't go up or the yield didn't go up?
Yeah, the yield didn't go up. A lot of people were expecting soybean and corn yields maybe to be up a little bit, but they didn't. And we still got a big crop. I think it would have been a lot bigger with a better finish. But we're hearing still that these later beans that finished under more dry conditions have taken a hit on yield. So we'll see what happens in subsequent reports. But the balance sheet is still way too large on ending stocks at 550. And I do think the export demand is still way too high from USDA. We're just not seeing enough Chinese business or export business in general to lower that number on the ending stocks down. And we could end up being 100 million too shy here on ending stocks. In other words, we get to January, February, and South America has a big crop. We could be running 650, 670 as we get into the spring and summer of next year. So Guy has to remember this balance sheet on beans could still swell from an ending stocks perspective.
Yeah, how concerned are you about that, Jim, in terms of especially this big Brazilian crop that's coming at us here?
I'm very concerned, Michelle. I mean, I think now that we got this report out of the way, the 0.2 really wasn't enough there. The problem is Brazil's weather pattern is shifting right on time. They're starting to get move from their dry season to their wet season. If they have a trendline yield crop, the projected carryout is going to balloon the world stocks to all-time highs. It's going to balloon the world stocks to use to the second highest level. And the fact is, that's not $10 beans. That's $9 and might even hang an 8 in front of it. And I think the market will grind lower, especially if it gets convinced that crop is there.
Jim, were you at all surprised with what USDA did with yield? Because there was a lot of talk about the late season heat and dryness, maybe trimming yields even a little bit more on soybeans.
They were very close to what we thought. I mean, exactly. The late beans had tailed off a little bit as in general. And in general, we're hearing the corn yields have hung in there very well. So I 100% agree with where the USDA is at. But like I said, it wasn't a game changer. Now it's really going to be depending on demand and South America production.
Yeah, where are the markets headed next now that we're post-WASD? We'll talk about that and where prices may head coming up next.
Purchase with a Purpose is brought to you by the Mighty Micro from Mosaic Micro Essentials. We put more in so you can get more out. Visit microessentials.com to learn more.